Hi guys, I hope you're well. I've just come back from outside and as you can see it's pretty cold still, so it's a great opportunity to make a video about a really exciting fund. So it's a bit different from my normal videos. I'm going to be looking inside the fund, who's running it, what the returns are like and why I invest in it. So the share price of this fund has actually grown by 50% in the last year, which is obviously very impressive. It invests in the fintech space, which is a very exciting area, but we'll take you through all the details. The name of the fund is of course Augmentum Fintech, listed on the London Stock Exchange. Augmentum is the only listed fintech-focused venture capital firm in the UK, having launched on the LSE back in 2018. If you're a regular viewer of my channel, you'll know that I normally start off with 3 pros and then 3 cons of any investment, which I'll cover, and then we'll delve into some of the detail of the fund and exactly what they do. So starting off with the pros, so firstly it's a pure fintech play, so it's really looking at the future of finance. So you've got companies on there such as Habito, which do online mortgages, you've got Interactive Investors, which is a large brokerage, and also Tide, which deals with payment for small businesses. Number 2 is that you've got an extremely successful leadership team. You've got entrepreneurs that have turned into investors with the backing of Lord Rothschild, and we'll go into a bit of that detail later. The third pro is that you've got access to private companies only, so this means it's all venture capital, early stage stuff, so hopefully when it does grow, when it does exit, you hopefully get stretched PE ratios and you get re-ratings off the base of that. So actually the value of the company will increase just because more people have access to it once it's listed on the stock exchange. Just to balance it up a bit, here's some cons. So it's a relatively new fund. It's been going since 2018. Most funds, they like to run them for about 5 years, and then for some reason after that point make a decision on them. People like a bit of a track record, a bit of history. Number 2, there's no dividends paid. So if you're looking for an income stock, income fund, this isn't really gonna do much for you. And also there's an ongoing charge of 1.9%, which is actually quite high, but you're getting exposure to private companies which you don't normally get access to. Also it's a fund that specializes in fintech as well, which is really the future of finance compared to those incumbent banks that you hear often about closing. The last con, and this is actually a big one, is it's actually trading at a premium to net asset value. So really good that it's a close-ended fund, especially for illiquid assets like private companies. That's brilliant. What I'll do is I'll post a link to my other video where I talk about close-ended funds versus open-ended funds, and that might actually be useful for quite a few of you if you're new to investing, if you're new to funds, that kind of thing. If you don't have time to watch the whole video, you can take away those top 3 pros and cons, hit the subscribe button, and then I can post more ideas up on here in the next few weeks as well. So with the high level pros and cons over, let's go into some of the details. So this fund is invested in unquoted fintech businesses, and it actually says it will not invest in publicly traded companies. It's really early stage stuff. So here's a quick look at their portfolio, some of the companies that they hold, including Interactive Investor, which is one of the fastest growing brokerages. You've also got the likes of Habito and Zopa. So Zopa is like peer-to-peer lending. Habito is an online mortgage company. So for example, I've just remortgaged with them. It's very easy to use. I didn't pay anyone commission. They get paid by the mortgage lender. And it's a really smooth process. So yeah, I had a really good experience with Habito. You've got Bullion Vault, so if you're investing in gold and other precious metals. Interestingly, you've also got Whiskey Invest Direct, so this is about buying casks of whiskey direct from the distillery, so I guess alternative asset classes are already covered in there. Looking at their performance, it's actually been, I'd say, fairly good over the last year, up about 54%, over the last 2 years up about 45%. And the thing is, actually they haven't got that track record established yet of that 5 years, which people tend to look for funds, and they themselves say that they recommend holding their funds for over 5 years. That's how long it's taking really fintech firms to come to fruition, and they actually say it could take longer than that. They don't have this hard and fast rule of buying companies and then every 5 years churning them off, selling them off. They're really about the long-term growth of these companies and getting in at the early stage of them. So as you can see, it's actually trading at a premium to net asset value of nearly 20%, which is well, it's basically huge. Now that could be for two reasons. Firstly, investors can see the upside and the potential in this company, which is great. And the second of all is actually the net asset values are, they're hard to value and actually are done perhaps on a conservative level. But we'll come to that a bit later actually, because there's a few points that Investors Chronicle actually covers which are quite interesting as a bonus later in the video. So if we take a look at the people actually running this fund, it's actually quite fascinating. The two main people are actually Tim Levine and Richard Matthews, both of who have really interesting careers. Initially kind of business based, kind of consulting based. I'll leave you to read it in your own time. But really the interesting thing is that they're both entrepreneurs who have now switched over to becoming investors. So actually they had a great success in the early 2000s with Flutter, which is like internet betting, and it merged with Betfair. So back in 2009, they founded Augmentum Capital, and that was backed by Lord Rothschild and his investment arm, RIT Capital, to invest in fintech businesses. And now they sit across the boards of their relative investments. For example, Zopa, Interactive Investor, Bullion Vault, which I mentioned, and they're really impressive individuals, and they actually have walked the walk. They didn't just talk the talk. So they've actually started off their own ventures, they've proved successful, and now they tend to investing for other people, which is really good. So what I'd say is actually, despite the fund perhaps not having that much of a history, these two guys obviously they've got a lot of experience, a lot of valued experience that should be recognized when thinking about investing in this fund. So looking at their fees, it actually looks quite top here, nearly 2% that you're paying. What you're really paying for is that level of expertise when dealing with private companies that the valuations are quite difficult to understand and to negotiate on. And it's actually getting that early access to early stage companies. That's the value I see being driven here. This is a fund for the long term. Personally, I'm going to be holding it for at least a decade. I think there's going to be some ups and downs. Of course, net asset value gets restated. So thank you so much for sticking with me through this whistle-stop tour of Augmentum Fintech. What I would say is please subscribe if you would like more videos like this. Less hype, more balanced views on stocks. So Investors Chronicle actually have a hold rating on this. They seem to think back when the premium was only 16% that the net asset value is warranted, especially as they thought they could see upside in this. Personally, this is a long-term hold position. If you're looking to get into a fund at the early stages, this might be for you. Obviously with that comes higher risk, but also potentially higher reward.